So let's start off with Google. Now, we put this one up the front because it's absolutely huge. It's an internet search company, of course. It's synonymous with Googling is the idea that you go online and look for something. But its core business, in fact, is advertising, internet technology opportunities, and advertising generally, cloud computing and software. AdWords is the name of that business. That's where they get paid if somebody searches for something and it takes them into that environment. But don't forget Gmail, don't forget YouTube, don't forget Google Maps and all the other things that they own. This is a huge global conglomerate, $468 billion worth of market cap. Price to earnings ratio 30.7, not currently paying dividends. And Ernest, a fabulous and enormous move on Friday where the stock price shot up after some quarterly results. What's your overall view of Google with regard to this?
You know, Paul, I've loved Google ever since I started using the search engine, which was many, many years ago. And I think essentially why I like them is they've got the best search engine in the world by a long shot. And their goal with that is to make all the information on the internet much easier to find. And as you said, all those other things that they have allied to that, Google Maps, YouTube, a whole bunch of other things, makes the Google family or Google ecosystem used and touched by almost all of us on a daily basis. And I think, you know, what we're seeing now at Google, and I'm not a Google expert, but what we're seeing now, I think is just the beginning of what's going to be happening over the next 10 years with Google.
So the real shift that brings about that massive move to the right-hand side of that chart you can see there, and this is arguably this is the Google share price since it did the split between the A and the B class and C class shares. But that's the gigantic soar higher up to its all-time high at the tail end there. Let's leave that aside. Share chart-wise, the key issue for me with that announcement was that the new CFO, who's an ex-Morgan Stanley banker, who's been brought in to make sure that the kids, that's Larry and Sergey, who run the business, actually do pay attention to profitability. That was very positively received. People are saying, look, this company's got fantastic revenues. It's a global player. It's doing well in all markets around the world. But it can now also attend to shareholders' requirements, maybe start paying a dividend, start increasing its profit margins, even as it's so dominant in the search space.
Yeah, and I mean, to be fair, I think over the last couple of years, Google has been seen to be a bit of a maverick type company in the way they've gone about some of their investor communication.
Driverless cars and all the other things.
And I think maybe, you know, investors would like a bit of that type of impact on the company. And so perhaps that's a very good thing. But I'm still really bullish on them, Paul, and I'll tell you why. Is if you look at search, they pretty much dominate that. If you look at the mobile operating system, they pretty much dominate
that's
that.
That's Android. So outside of the Apple environment, that's theirs.
So, I mean, you know, if you look at what they're doing in all these areas, they're just coming up with really good, innovative things, which we end up using more, and it leads to being able to monetize those things better. I looked at Google's profits over the last 4 or 5 years. They've compounded at 15% odd. And that's not bad for a company of that size. I think their profit has reached around $10 billion. So, and that's profit after tax. I mean, any one of our local companies would wish to have a revenue of that size. So this is a big company. I guess some would say at 30 to 35 PE, it's a bit high. But given what you've got, I don't think you can get that anywhere else.
Okay, good. So we're going to put that on the table. It's in the business-to-business environment in the sense that it helps so many businesses market their services. We're going to go hot on it, I assume?
Yeah, definitely.
Hot on this one.